Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar. As I said last week, I think Aussie very close to a point where you're going to get a turnaround in this market. Momentum being what it is, however, I don't think just because you're at that price level, close to that price level, I should say, that's the time to buy. I think it'll take a long time to carve out a bottom here. Probably the one thing that holds me back from being long this market yet is that basically I'd have to take money out of U.S. dollars to buy Aussie, and that's just not a good move for me right now. Basically, you if you're going to buy something, you have to reallocate where your money is now, and I'm just more comfortable being in U.S. dollars right now. So again, I've said it a couple of times now. I think price-wise, you're very close to a turn. Time-wise, maybe not. So for me, there's just more places I'm more comfortable with my money, but that can change for sure. So I'm keeping an eye on this level in the Aussie. I like this level. Next market we'll take a look at will be the dollar Swiss. I like dollar Swiss more than I would like long Aussie. Put it that way. If you break out of here, this is a daily chart. Let me pull out and give you scale. If that market claws above par, above the 100 level there, you could see a big move here. So it's hard to say no to trades like that when you see the historic price where they're at, and you believe that things are going well in the U.S. economy. The rest of the globe is going to benefit from a strong dollar also. It's going to definitely help their sales. It's going to help their exports. So yeah, I like dollar Swiss on the upside. Let me go back to a shorter term chart and look at how quickly that dip was covered. In fact, you shifted that pattern. This pattern, that intermediate term pattern, held bullish there. You only had one close above it, and then the short term pattern. Look at how quickly they shifted that. You already retraced well over 2/3 of that pattern. So hey, love dollar Swiss on the upside, short term and long term. You got to keep buying dips there. Dollar index itself, I'm whistling the same tune here. Let's pan out to a weekly chart, get a little more history, and to me this is a bull flag. And again, here's another one. Look at how quickly it comes back. The market makers, they're able to reset the market. They're able to flush longs out of there. You make a lower low, you knock out stops, but then what happens? Boom, it snaps right back. And that's why I've been preaching long term, you got to hold your dollar longs. In fact, I really believe you better be long the dollar here ahead of the rate hike. There's so much chatter out there. When are they going to raise, and are they going to raise? They're going to raise, and it's just a matter of time. And that's why I say when that time comes, you better be long. You're not going to want to play catch up, because that guy's going to be jumping out of here in a hurry. It's going to jump above par. You're going to see 102, 104, etc. So you don't want to be in a position to chase that. You want to be long now. So love dollar index long term. Of course, if I love the dollar index, I have to have opposite feelings for my old friend the euro here. And hey, I hadn't minded making money on the long side on these rallies in here, taking advantage of that secondary correction. On the other hand, long term, you know where I stand. That's a pattern that's not going to go away soon. And the thing you have to remember is that a weaker euro is going to be beneficial for these guys. The weaker euro is going to be beneficial for Europe as far as it being a global trading platform, for sure. It's going to open things up. It's going to make them much more competitive around the globe too, compared to that strong U.S. dollar. So in my estimation, this is a bear flag, and eventually, and probably sooner rather than later, you're going to break out of there, and you're going to see an acceleration, and you're going to see a test of par. And as markets tend to do, you're going to overshoot that. So you're going to see par. You're probably going to see 98, 97, etc. So lower prices for the euro. That's where we're leaning. Here's the gold market. Weekly chart, you see a pattern of lower lows and lower highs. The only one way to define that's a bear market, right? A little bit shorter term, gold, it's actually holding up fairly well all things considered, it's only what retraced about half of that rally there. So this may be something to watch a little shorter term. Here, I'll do a quick analysis of it. Yeah, you got a double bottom, and we call that a zone between the 50 and the 625, or the 50 and the 66. We call that a buy zone in there. And so far you have a double bottom in there. That doesn't mean I'm going to buy it, because the majority of my longer term patterns are down. On the other hand, shorter term, gold could have been worse. This sell-off could have been a lot worse. I had a nice trade in here. I caught that leg down, and generally, you catch a nice move, you tend to get out at that 50% and just pull up short and see what happens. And I've been doing that, and I'm watching it, and the 50% is holding. So again, we'll have to watch that. If this guy were to continue lower short term and get below 1100, give me a couple closes below that 1100 level, I'd be back on the short side in a hurry. Long term, still like it. It's a bear market. I still like it on the downside. A little bit shorter term, I'm a little bit leery here that you're hanging up on that 50%. You haven't even got to 2/3 yet. 1100, good support. Last market we'll take a look at will be U.S. interest rates. There's U.S. rates. Let me pop out to a weekly chart, and you can see that big support zone. You had another one here held. So you got big support there. Go back to a daily chart, and a little bit indecisive here. That's what markets are going to do. To me, if I like it now, if I liked it on the potential breakout here, I love it even more if you get another shot at buying it back in that zone. So we think that the bottom, long term, the bottom is in U.S. interest rates. Here you can see it here. That's the actual bottom. Then, and here's a higher low, and you just put in another higher low. So for our money, the cat's out of the bag on the upside for interest rates, and it's really just a matter of time before the Fed does raise them. And again, you want to be long now. You don't want to have to chase that dollar or chase rates once that decision's been made. I'm Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you next week.